I want to refer back to this trade one more time that we had on. I told you I was in a similar position, and I got out of it a few days ago. I think it was on this day right here, and squeezed out like a 5% profit. The only difference is I was short at 2035, 2030, 2045. I was short the 2030s, long the 2035s, which the market bounced right up through that area. Not a lot, but it did go above 2030 here for a day or two, just intraday. But either way, I was out of it on this day. But in this position, if you didn't take a paper close on this, I guess is the way to say it, I want to look at this one more time here tonight and show you basically where we are. On this trade, the only thing to do at this point that's even remotely necessary is, if you wanted to shut this thing down, would be to buy back this short spread right here. Buy to close those 4 contracts of the 2040, sell to close the 4 contracts of the 2050. All this down here could just be left to expire. It's not going to happen, but by some miracle, if we just crashed, that would be great. But there's 2 days left, Thursday and Friday. I don't see that happening. But right now, if we wanted to completely shut down the trade, all we would really have to do is buy back this short spread, buy to close these 4 2040s calls, and sell to close these 4 2050s. I have no idea what those are going for. We will look at those quickly here and check it out. So for the October 23rd, the 2040 calls, $1.65. We could buy this back for $1.65, and the 2050s, 65 cents we could sell those for. So, but buy to close the 2040 calls for $1.65. If you look at that bid-ask spread, it's 150 by 175. That's 25 cents. We should easily be able to take a dime of that, 10 cents of a 25-cent spread, and buy to close those for $1.65. Sell to close the 2050s for 65 cents, which would be right in the middle of that 10-cent bid-ask spread, 60 by 70. So that's a dollar debit. Okay, that's a $1 debit. So you know what would happen here if I'm just going to put shut down. Well, I'll write it out. If we bought to close the, let's do it like this. If we sold to close the 4 2050 calls, and we bought to close the 4 2040 calls, that is going for a dollar debit. Exactly. Not nice and clean, right? Times the 4 contracts. That is a $400 cost, but we took in how much? Do you remember? We took in, I had it on here a few minutes ago, I think it was $11.30 total. Is that right? Let me do some math here real quick. I erased it, or took the box off here by accident. Just doing some math quickly. And then 8 plus 8 minus 8.5 minus, yep, there we go, $11.30. So we took in $11.30 credit. That's $1,130. So subtracting that $400 cost, so $11.30 minus the 400, and that would be our profit, right? So that would be a $730 profit, and that doesn't seem like much. I realize that, but keep in mind this is based on the risk of this particular position. A lot of people look at this and say, my goodness, $730 all that time. Well, we just did a small lot here. You know, we did a 2x5. That could have been a 4x10 or a 6x15, and it would have been, you know, twice as much as $730 or 3 times as much if we would have upped the contracts. But I try to keep the contract lots as small as possible in these trades for ease of understanding. And you know, it becomes complicated when you start doing, you know, 17 contracts of a trade, or you know, a 17 by 41 or whatever it is. And so I try to keep the things as small as possible, the contract lots. So you know, we basically had 88.70. If you remember the risk, if you go back an update or two, we went over how we calculate the downside risk. It was 88.70. That's our margin hold on the trade also. So 730 in profit divided by the 88.70, it's a not too shabby 8.2%. 8.2%. And you know, we only have 2 days left, and the market could pull on down here. Now, at this point, you would need to sit and watch it. There's no way around it. If you would stay in this, you would need to sit and watch it for the next 2 trading days. And as long as we expire below 2040, you know, we would get to keep that full $1130 profit, $1,130 profit. And if we kept that $1130 profit, then divide that by the 8870 that we have on margin hold and our max downside risk. That is, excuse me, I did some math wrong there. That is 12.7%. Not a home run, you know, not out of this world, but a very solid return on a trade. As is the $730 profit. And what was that percentage again? It was 8.2%. 8%. We'll call it 8% right now that we could get out with in our pocket. And you know, 12 months of that, that's 96%. You know, I want you to keep that in perspective. So this is the last time we'll look at this trade. We won't look at it again. I'm being very clear right now about what will happen if the market comes on down and we expire above 1930 but below 2040, which is very, very possible, very likely is what it's shaping up to be right now. We would keep that entire $1,130 profit or credit we took in. Again, that's 12.7%. If we went on up, well, you're going to have to deal with this short spread. It's late in the cycle to have to deal with this. I wouldn't want to do that. If it were me on this practice trade, I'm going to go ahead and call a shutdown on this thing. I know we talked about it last time and what the profit was, and I forget now. I tell you, when you're out there during the day and you're in 1 or 2 positions, and I've told you all several times, and I told several of you at TSS, and this really seems to be a deterrent for people. It really does. And I've never understood it, but when I tell people that I'm rarely, like 90% of the time, I'm never in more than 2 positions. A lot of people seem to shun that for some reason, but you know, that's just me. It's the way I trade. I don't like having, you know, 15 different positions on it. It becomes unmanageable, and then you have overlapping legs, overlapping expirations, and it's just, it can confuse you. It really can. Unless you are absolutely 100% just driven, dedicated to do nothing but focus on your positions all day long, every minute. And I don't like that. So I was in 2 positions until a few days ago. I've only got 1 position on now. I'll be looking to reposition in if we fall a little harder, if we pull on back some. I'll use that opportunity to reposition into some new trades, or a new trade, not new trades, but a new trade. And we'll do the same here. We'll wait a couple more days and see if we can get that pullback. It looks like it's starting, but who knows? It looks like it's trying to start. So something that's interesting here, if you look at where we seem to top out and have rolled lower, it's right at the top of this candle where we really started the panic selling. That candle right there from 821. That's where we've topped out at, and that candle is basically at 2035, or roughly, you know, 2034 and change. But that's where we've really topped out. We've climbed all this way back up, and it seems like we've topped out a little right here at the top of this candle. And that's common. That's common to see the market to be tested. It's common for the market to be tested at that area where we gapped down a while back, and this was a couple months ago, but where we gapped down a while back, or where we really had a really big hard selling day. It's common for the market to slowly move back up to that area and then see if it can break above, and that's exactly what we're doing now. Now, where it's going to go from here, I have no clue. I really don't. My feeling is, after such a run from 929 up until today, that we will pull on back. That's my feeling. If I was forced to choose one way or the other, that's what I would lean toward. But again, I try not to lean. I try not to lean one way or the other. But that is my feeling. But you know, either way, this trade. Again, it's not been one of the best, but it's pulled out a real solid percentage here for us.